Hey everybody, Joshua Phillips here at Churchill Mortgage with your weekly market and mortgage rate update. So today is August the 30th. Welcome to Labor Day weekend. Looking out the window, I think I may be the last one here at Churchill Mortgage as everyone seems to be leaving early today. But hey, not me. I'm going to stay and do these market updates. So let's get to the news. I always like to start with a CNBC article. So what we were looking for today, we're always looking at these latest reports, and this one's called the CPE, the Personal Consumption Expenditure Report, that came out this morning. These are the type of reports that do move the markets, and this one came out. The Fed's favorite inflation indicator increased 0.2 in July, as expected. As expected is a little bit of a dud. I guess it's better than worse than expected. We'd love to see better than expected, but it wasn't worse than expected. It was as expected. So bit of a just nothing burger, so to speak. So with the news today, and basically just saying, hey, things are improving at the rate we expected them to improve at. So let's jump in here and look at our mortgage-backed security charts. Always bring these charts up because this is what any good loan officer in America has this chart up on their computer all day long. I do, because I'm one of the good loan officers. So, but anyway, this is a mortgage-backed security Japanese candlestick chart. All you really need to know to read these charts is, green is good, red is bad, and the higher the security price, the better mortgage rates are doing. So, you know what? I hate to say it. This week was just nothing, flat. And if you really look, if you take it back almost like the last, like 3-4 weeks, it's just been pretty darn flat. We got some good news several weeks ago that just really indicated that the Fed's going to start cutting the Fed fund rate September 18th. Pretty much a guarantee that it's going to be either a quarter or a half. And as I've been saying on the last few videos, that news has already been baked into today's rates. That's why today's rates are better than rates a month ago. So, you guys are smart. And when you see that happen September 18th, you're going to say, oh, that's not new news. Rates did not suddenly drop a quarter to a half. Also, they're cutting the Fed fund rate, not mortgage rates. So anyway, but it's all related. It's all, I think, good news for mortgage rates. You can see here, we've talked about this before. There's these things called daily moving averages. The 25-day moving average, the 50-day, the 100-day, the 200-day, all these moving averages. We are above all the moving averages. And as long as we stay above there, which we've been now for, quite some time, looks like July and August, we've been above the 25-day moving averages. And so that just means that we're still in a positive trend toward better mortgage rates. Although it's been slow and mortgage rates have really not changed much over the last, let's say, 3 weeks. So, but we're still in a good positive trend line. It still looks like, the Fed's going to be cutting the Fed fund rate. What we're going to be looking at that meeting in September is what are they saying about November, December? Like, what's the future look like? And as they start talking about perhaps additional Fed fund cuts, we may see, mortgage rates improve further. But in lieu of big news, it's going to be probably pretty flat to very, very slowly improving. I've been reaching out to a lot of folks. A lot of you may be getting this email that are past clients of mine that we've done a loan for. And one of my main messages in terms of refinancing is to be patient. You're going to start get flooded with calls about refinancing, but I really don't think there's a hurry. And I think rates will probably be better in 60 days than they are today. The only thing I would put an asterisk mark is the election. We don't know who's going to win. We don't know how that's going to affect mortgage rates, the Fed's decisions, things like that. So that is a big asterisk, unknown factor. Anyway, for now, it's been a boring week as far as mortgage rates are concerned, but we're still in a positive trend line. That's good news. Let's see if we can keep it going. Hey, if you have questions, you want to discuss your mortgage situation, I'm always happy to set up a call to discuss that. If you want to get pre-approved, I always include a link where you can do that. And happy to help. Have a great Labor Day weekend. You take care. Bye-bye.